Hey traders, Mike Sir here. Do you want to know the trading strategy that many hedge funds use to trade? The way they approach the market to buy hundreds of thousands or even millions of shares? Well, in this video, I'm going to show you exactly how the big institutional players build their positions in individual stocks and how they profit from this type of trading strategy. Now, this way you can better understand how the big boys play and follow them in their footsteps. So let's get started. We all know in the financial markets that the large institutional traders control the market, and we as retail traders have no power to move any stock or financial asset. Therefore, if you want to succeed as a trader, you have to learn to recognize what the professionals are doing and follow what they are doing, because chances are they are always right and you'll be able to make a profit. So one of the secrets and profitable trading strategies that you can employ is to identify what the big money is doing, watch what the big boys are doing, and follow along in their trading. Now, the process of how the big boys buy or sell financial assets in the markets involves some form of manipulation to hide their intent and positions. So let me walk you through step by step on how they do this. Before I share with you how the big boys trade, please take a moment to like this video. I would really appreciate your support. Okay, first of all, let me explain how the stock market is like any merchandising business. Now, you try to buy items at the lowest price with the hopes that you can sell it at a higher price than what you paid for it. And you keep doing that at the highest possible rate of turnover. Now, it's a saying that you probably heard of buy low and sell high. So now let's say, for example, you want to buy 100,000 shares of Tesla stock and you want to buy it at the lowest price possible. But if you buy 100,000 shares all at once, you could easily push up the price, especially if there's not a lot of stock supply. So therefore, how do you accumulate a sizable stock position? Well, what you want to do as a big boy trader is to slowly accumulate shares in the stock, and this could sometimes take days, weeks, or even months. And also, you want to accumulate the stock at the lowest price possible, so you want to shake out or scare the little guys into selling the stock and forcing the stock price to head lower. Now, the best way to do this is when the overall stock market is particularly weak or when the stock has very little trading activity. This gives you an opportunity to raid the market for Tesla stock and make it look like it's very weak by sending in lots of sell orders through a number of brokers. Now, this gives the appearance that there's heavy liquidation of the stock and therefore an opportunity for you to accumulate the stock at much lower prices. Then once you have accumulated your 100,000 shares of Tesla stock, you try to push the price higher by putting out good news about the company that the general public is already aware. So for example, it could be that Tesla has already announced that they will be releasing their new car next month, and all you have to do is heavily promote this news. Now, you may have heard the saying, buy on rumor and sell on news. Now, the rumor is Tesla is going to release a new electric vehicle soon that is going to sell like hotcakes, and the excitement around this news would cause the stock price to go up. Then once the news and the details of the new car is finally released to the public, the stock price falls or has all the big boys take their profits. Now, let me give you an example of how the big boys made massive profits in Tesla stock. So here you can see a chart of Tesla, and the stock price is trading in between $400 to $460 per share. So let's just say that you think that the stock price is going to go higher and you want to buy 100,000 shares of Tesla stock. So ideally, you want to try to buy most of your shares near the bottom of the price range, which is around $400 per share. So you start buying close to $400, but the price starts rising towards $460. Now, when it reaches the top of the range of $460, you force the price back down by offering large amounts of stock and inducing other traders to sell their shares or entice short sellers to bet on the downside of the stock. Now, by pushing the price down, you may sell, let's say, 10,000 shares close to $460, but as the price goes lower to $400, you're able to buy 20,000 shares. So hence you're able to accumulate 10,000 shares at the lower price range. And this is how you're able to accumulate 100,000 shares as close to $400 per share by repeating the same process over and over. Now, if traders can spot the buying patterns of these hedge funds on how they buy and sell to accumulate shares, then you can follow along and profit like them. Essentially, the big funds cause prices to move up and down in the trading range, which you can see clearly on the price charts. Now that you accumulated your 100,000 shares, you have no interest in selling the stock at $460. And this is where the stock price is ready to move higher and often referred to as the mark-up phase. And this is where the hedge funds publish positive news articles about the stock, or perhaps go on TV and talk about how Tesla is going to take over the electric vehicle industry, or how great the company is. As well, if the stock price isn't moving much, they'll buy more shares to prop up the stock price until it starts moving higher. But in Tesla's case, as you can see in this chart, the stock price doesn't need any help and goes up sharply and reaches $880, an almost 100% increase in the price. So now you're holding 100,000 shares and looking to take your massive 100% return. But how do you sell 100,000 shares all at once? So if you sold them all at once, you could probably easily push the price lower. So in this case, what you want to do is coordinate the timing of selling your shares when Tesla reports good news such as the release of their new electric vehicle, or when there is considerable optimism in the overall stock market. Now, as new buyers rush in to buy the stock, you look to easily offload your shares, 10,000 to 20,000 shares at a time, on the strength of the stock price. And you can see here from the chart that the stock starts trading in a range from $800 to $890 per share. And what you want to try to do is offload most of your shares at the upper price range. Then once you sold your entire 100,000 share positions, and other big hedge funds have taken the profits from their Tesla trade, the stock price usually falls back down, trapping all the retail traders or amateurs who bought at the highs and don't have the buying power to control the stock price. And you can see here from the Tesla chart that the price falls from a high of $890 all the way down to $550. And this is exactly how the hedge funds and the big boys accumulate large positions in the stock that they like, and how they manipulate the stock price to their benefit, trapping the amateur traders every single time. Now, you could say that this is stock manipulation or should be an illegal activity, but the big boys didn't break any rules, or they're not trading utilizing any insider information. They merely utilize the size of their capital to accumulate shares and promote publicly available information. Now, it's not ethical, but on Wall Street, everyone is looking for an edge, and this is the big boy edge. Thanks for watching. If you like this trading strategy and want to learn more strategies from me, please smash that like button, hit subscribe if you haven't already, and tap the notification bell. I'll see you all in the next video.